Salesforce stock got absolutely destroyed over the last year, and anyone who has been holding the stock for 5 years actually lost money. Now, honestly, watching this play out is quite wild, but before we even talk about Salesforce, we need to talk about the bigger elephant in the room. This is not a Salesforce problem. Right now, the entire software sector is getting wrecked, and it's getting repriced. The fact is, for over a decade, software stocks lived in a world where growth mattered more than profits. We saw sky-high multiples, cheap money, and endless expansion. And now investors are realizing something very uncomfortable. AI doesn't automatically make software more valuable. In a lot of cases, AI is actually making it easier to replace tools, not harder. And I'm not saying this as someone sitting on the sidelines. I actually built an 8-figure marketing business online using these same software tools I'm about to cover today. I even used Salesforce as a CRM at one time. I've used email platforms, I've used tracking software, page builders, research tools, and this is just the backbone of my marketing business. I actually relied on them heavily. I paid for them, I optimized around them. But over the last couple of years, I'll be honest, I've watched AI quietly start replacing a lot of the things I've used for years. I mean, tools that were used and essential to running my business are now either unnecessary or massively devalued because AI can actually do the job faster, cheaper, and with less friction. So that's the part most people aren't paying attention to. This isn't about AI being impressive, it's about how quickly it's changing what actually matters in business. Fact is this is happening now. And that's why you're seeing stocks like Salesforce down 40% even after landing massive contracts. So, if you're thinking about buying CRM stock or any software stock, you need to watch this video and understand what's actually happening under the hood. So let's get into it. But first, please do me one solid and please click the like button or subscribe to my channel. It really helps my videos get seen and I really appreciate it. Okay, we're going to do something a little different and we're going to go inside my computer today and we're going to actually talk about some of the stuff that we need to know about this stock. But I wanted to first cover some of the stocks that are actually getting hit really hard. You can see this isn't just a Salesforce problem. We have Figma Inc. here going down dramatically, HubSpot taking a beating. We have Microsoft, Adobe, Intuit, Duolingo, all of these stocks taking a major beating. So we're going to talk about that, but let's just do Salesforce so we can cover Salesforce and then we can understand how this all kind of fits together in the software realm. So let's start with a recap on what Salesforce actually sells, because I think most people think it's just a customer relationship management tool. In other words, a CRM. But look, Salesforce isn't just one product. It's actually a whole suite of cloud software. So it basically runs your entire customer-facing operation. Now, let me quickly break down what they actually sell as I rattle these off, and you'll start to see how the competition can be fierce in all of these services. So first of all, they have the Sales Cloud, and this is basically their OG product from 1999. Your sales team uses this software to basically track every lead, every deal, every customer interaction, and pricing starts around $25 to say $550 a month per user for the good stuff, okay? Next, we have the Service Cloud, and this is basically a customer support platform. So when you chat with the help desk or you submit a ticket, the agent is probably using Service Cloud. Again, you know there's other platforms out there that also do this, right? Next, we have the Commerce Cloud. This powers online stores, and brands like Adidas use this to run their entire e-commerce operation. Then we have Data Cloud. Basically, you can use this to pull all your scattered customer data from different systems into one unified source of truth, they say. They also own the Slack messaging platform that they acquired. And you can see here in their other product listings that they also integrate it with Tableau, which is another product they have, and it turns your data into visual dashboards and reports. And then all of the rage right now is, of course, behind Agentforce, okay? And that's the big deal here that everybody thinks is going to turn the page for CRM. And this is their new AI agent platform that can autonomously handle customer service. So basically, it can do the sales tasks for you, it can do the analysis, and it doesn't need constant human babysitting. So this is it in action right here. So the key thing, all of these pieces talk to one another on one single platform. So that's the benefit for companies. So when a customer buys something in Commerce Cloud, that purchase history instantly shows up in Service Cloud for support agents and Sales Cloud for the sales team. That integration is what keeps Salesforce customers locked in. So now that we have a better understanding of the current business model, we can see that this has evolved over years, and this can also be seen in their financials. So let's go over here now and have a look. In Q3 fiscal 2026, which ended October 2025, Salesforce did about $10.3 billion in revenue, which is up 9% year over year. Now, companies pay CRM based on how many users they have and which features they need and how much data they're processing. So a small business might pay $25 per user a month, a Fortune 500 company, while they're paying millions annually because they've got thousands of users across all those different clouds I just mentioned. The revenue is ultra predictable. Once you've got your entire sales operation running on Salesforce, switching is basically a nightmare. We're talking months of migration, retraining thousands of people, and potential data loss. Most companies just keep renewing. And here's where something else is interesting. The operating margins. Let's have a look at those. Operating margins went from roughly 2 to 3% in fiscal 2023 to 20% plus now. Free cash flow hit $2.2 billion in Q3, up 22%. So the core business is essentially printing cash. But this is a big but. We have a deceleration in revenue growth. Let's have a look at that. Revenue has actually slowed from 20 to say 30% annually down to single digit growth. Now keep in mind, some of this slowdown is actually intentional as Salesforce shifted from growth at all costs to margin expansion, and that's why their margins are going up. But the market still punishes that transition. They care more about this graph here. So basically, it's not a growth stock anymore. This is a mature software company, and this could be one reason for its steady decline. We all know that software companies in general are taking a beating lately, but AI is taking the stage. And when you couple that with decelerating revenue, it's not good. Now, we also have some major competitors on the stage also eating their lunch, and here's where it gets uncomfortable. We have Microsoft Dynamics 365, which is a real threat here. They've got roughly 5.2% market share and grew revenue 23% last quarter. And here's why Microsoft scares me if I'm a Salesforce shareholder. Dynamics 365 actually works natively with Office 365, Teams, Outlook, Azure, Power BI, and all of the stuff enterprises already use every single day. And AI Copilot comes bundled across everything. So Salesforce has to compete against that ecosystem play. And for companies already running on Microsoft's cloud infrastructure, Dynamics 365 actually offers lower total cost and faster startup. So Microsoft doesn't need Dynamics to be better, it only needs it to be good enough. Another competitor is HubSpot. Here's their stock here. You can see it's also going down. Now, they basically own the mid-market. While Salesforce goes after enterprises, HubSpot targets small and medium businesses with simpler, cheaper solutions. Implementation takes weeks instead of months because it's designed for marketing teams who don't need enterprise complexity. So for a startup, why pay Salesforce enterprise prices and hire consultants when HubSpot gives you a clean, easy-to-use system at, say, $25 to $100 per month? Next, we have Zendesk, which competes head-to-head in customer service with faster deployment and easier pricing. Their AI is trained on 18 billion customer interactions. Next, we have Oracle, who has a 4.1% market share with enterprise CRM strength, and SAP holds 3.1%, focusing on large enterprises. But if I was a CRM shareholder, here's what might keep me up at night about this competitive landscape. Salesforce built its empire by being the best-in-class CRM, but now they're facing platform competition. Microsoft isn't just selling a CRM, they're selling an entire ecosystem where CRM is one piece that works seamlessly with the productivity tools, communication platforms, and cloud infrastructure that companies already use and pay for. Now, a lot of people argue that switching costs for Salesforce is what helps them, but basically that cuts both ways. If you're already deep in Microsoft's world with Office 365, Teams, and Azure, adding Salesforce means integrating an outside platform. So why not just use Dynamics 365 that's already native? Now let's talk about another major elephant in the room, the AI race that changes everything. Let's go back to Agentforce. Agentforce and Data Cloud combined hit 1.4 billion in annual revenue. Now, that's up 114% year over year, and Salesforce closed 18,500 total Agentforce deals, with 9,500 being paid customers. Now, that might sound impressive until you realize that it's only 6% of their 150,000 customers actually paying for it. But let's be fair, enterprise AI adoption always starts low. The question is whether it reaches 20 to 30% over the next 2 years, because that's where real revenue will actually the impact will actually begin. And that $1.4 billion represents about 3% of their total revenue base. But here's the thing. Microsoft, ServiceNow, Zendesk, they're all deploying AI agents too. Except in many cases, they're bundling AI as platform value instead of charging premium standalone pricing. So Microsoft Copilot, for example, gets integrated across the Dynamics 365, Office 365, Teams, etc., and is positioned as added value to their already existing ecosystem that you already pay for. So, if Microsoft's AI becomes good enough while being effectively bundled, why would anyone pay Salesforce premium prices for Agentforce? That's what I'm asking. Maybe post your comments down below and tell me what you think about this analogy or what I'm saying here. So CRM's CEO actually, his defense in this is that AI is only as good as the data it can see. So basically what he's saying is, since we have so much data, our AI will work better with your company, which kind of makes sense, I guess. So if Salesforce is betting that their agents will be so much more effective at actually closing deals or resolving tickets, that ROI justifies the cost. And that's the CEO's argument to what I just said. So I guess we'll see who wins this battle. But what does this actually mean for your money? So we know right now that Salesforce is down 42% from its 52-week high of 367. The forward PE is around 20. And you can see that here, right here, it's 20.7, okay? So it's reasonable only if growth stabilizes. 20 is not reasonable if growth is going down, okay? And it's still lower now. You can say it is still lower than Microsoft's 30 PE. So if we look at Microsoft, you can see that their forward PE is 29.1, okay? And if we look at it, of the 51 Wall Street analysts covering this, 36 rated a strong buy with an average price target of, and actually this is Salesforce, with an average price target of 331. So there's dramatic upside based on what Wall Street is predicting here. So here's the bull case. You're buying a mature, cash-flowing, cash machine with improving margins at a massive discount to historical valuations, okay? So that's the bull case. Operating margins, let's look at that again, just so we can see. This is Fiscal AI, if anybody's wondering. And you can actually use the link down in the description, and you can get access to this for free. And let's have a look at the margin. Let's bring that up, because this is where, when the bulls talk about CRM, this is really where we're looking here. Operating margins went from 3 to over 20%. In just 2 years. So if they can maintain 9% revenue growth while pushing margins to say 25 to 27%, earnings could grow mid-teens annually, even without revenue acceleration. So free cash flow is real. It's growing, 2.2 billion just in Q3. They're buying back massive amounts of stock. Let's actually look at that for a second. And here's the chart for the shares outstanding. You can see it did go up until 2022, but since 2022, the shares outstanding are actually dropping. So that is actually good for the stock. The AI opportunity with Agentforce could add billions in high margin revenue if adoption accelerates, okay? And another interesting factoid that I found when I was reading the Salesforce numbers here is that nearly 90% of Forbes' top 50 AI companies run Salesforce with an average of 4 clouds, okay? So the switching costs are real. The $5.6 billion Army contract validates their AI strategy, even if it's not immediate revenue. So this is more of a credibility and validation win than, say, a revenue needle mover. So let's talk about the bear case. Revenue growth collapsed, and that is not good. It's not a growth stock, okay? This is a mature company trading at growth multiples currently. We need that to change. So Agentforce might also cannibalize existing revenue. So think about this for a second. If AI agents replace the need for humans, Salesforce could actually grow agent revenue while losing higher margin subscriptions for human users. Think about it for a second. If you have 100 sales reps, that's 100 Salesforce subscriptions, or seats, we'll call them. If AI agents replace, say, 30% of the workload, do I need to keep paying for those other 30 sales rep seats if I'm using AI agents? So the math might actually work out neutral or even negative, and that's the real risk. The stock's performance is screaming warning. It's down over 37% in the last year, okay? And it's down nearly 15 to 16% this year alone, and it's trading 40% below its highs. Today it is down again, and it seems that no matter what happens in the market, these software stocks are getting crushed. Even on good AI performing days or some of the Mag 7s going up, you're seeing these stocks like Salesforce and other competitors actually dropping no matter what happens. So the sentiment is actually really bad right now. But the underlying issue is whether Salesforce can defend margins and market share as competition intensifies. Now look, I've been burned before chasing these hyped tech stocks. At 213, Salesforce looks like a solid company, strong cash flow, real customers, real margin, but you're also making a few big bets at this price. You're betting that companies actually adopt Salesforce's AI in a meaningful way, and you're hoping that that AI doesn't become a commodity that kills pricing power. You're also betting that Microsoft doesn't convince enterprises to just consolidate everything under their ecosystem, and you're betting that Salesforce's growth doesn't slow any further. Now, that's not a bad bet, but it's not cheap either. So here is where I'm standing on all of this. I am not buying Salesforce right now, and not because it's a bad company, because it's not a bad company. And I'm not buying because I think it's going to zero, because we know it's not going to zero either. But I am staying on the sidelines for now because I don't think the market has fully repriced software yet. Now, we're in that awkward middle phase, we'll say, where stocks are down, but sentiment hasn't fully reset. And that's not where I want to get the best risk reward. I might be wrong, and maybe this is not a falling knife scenario, but I'm not forcing a trade here. I'm doing something much easier. I've got alerts set on Salesforce and a few of the other major software names. And if you look at the charts of these software stocks, it's not hard to see the levels that these stocks could drop to. Now, I'm not recommending you try to time the bottom, and that's not what I'm trying to do here either. But what I'm doing is watching key support levels. And I'm waiting to see where buyers actually step in, not where I hope they'll step in. And while software works through this reset, we'll say, I'm looking elsewhere. I'm actually seeing better opportunities right now in industrial and defense names, energy and commodities, infrastructure and hard asset plays, and a few beaten down small caps with real cash flow. Check my other videos on this channel if you want to see what I'm looking at right now. So I believe that the best trades don't come from trying to guess the bottom. They come from waiting until the market shows its hand. When software finally finds a floor, when sentiment breaks and money flows back in, it's going to be very obvious. And trust me, I'm going to be there waiting to pounce. So until then, I'm watching, I'm not chasing, and let me know in the comments, are you buying this dip or are you staying on the sideline? Thanks for watching. If you liked that video, please don't forget to subscribe to my channel and we'll see you in the next one.